Hi everyone, this is Michael Ben-Ghiat with Lifetime Investor, and this is the Stock Picks Weekend review video for February 25th, 2023. Okay, let's go ahead and just get started. As usual, we're going to go through the current market environment and then review the stocks. We only have one stock left in our portfolio, and then we're going to go over the watch and ready list stocks. So getting right into the environment, well, this week we actually turned our stock environment indicator to red. Leading stocks are just not acting well, and the market itself is now starting to pull back. You have to remember that we always look at leading stocks. Those are stocks that are at or near 52-week highs or all-time highs, and setting up in bases, and how they act, it can be quite different from what the indexes are doing. Even though the indexes are made up of stocks, they're made up of all sorts of different stocks, including a lot of laggards and stocks that have broken down and all that. So, but we're always looking for the best stocks, and for a long time, almost 2 years, we've had this divergence going on between what the indexes are doing and what most stocks are doing. And this is really, unfortunately, not. We thought maybe this was going to change. We were seeing some improvement in how stocks were acting, especially after breaking out. They were starting to hold up. We were starting to see some decent gains in a few names. And then it kind of just gone right back down to what we've seen for just a long time since the bear market started. And it kind of leads us to believe that the bear market is not over, because we're just not seeing what we need to see. And so we're seeing, once again, a lot of volatility. Stock breakouts just are not lasting. Very few stocks have actually even gone up 20, 25%. We're not talking about like a lot of the beaten down stocks, the old names like Tesla and the Trade Desk. Many of these are still way down, even though they've made huge moves. So the money's actually pouring back into that sector. But that's not how we invest in the market. We're not looking to bottom fish a lot of these stocks. Some of them, who knows where the bottom is. And so that's not how we trade in this service. So, but going back to the leading stocks, they're not acting well. They're starting to fail. A lot of volatility. You get just erratic action. We've seen this in some of the names. We had one, Quanta Services, that just plunged right before earnings and then had a huge gap up on earnings and then kind of fell apart. It closed at its lows. Just a lot of volatility. Very difficult to actually make any money in this environment. So anyways, so we ended up going back down from yellow to red, and our exposure just came down too. And another reason too is that we lost all of the stocks on our growth portfolio. They all got stopped out. So that's also it's telling you something. If you're just buying the best names and they're not working, and you're losing all of them, well, that just tells you that this is not a market you're going to make any money in. So let's go ahead now and just get right into the looking at what's left of our portfolio. And that's and this is in our long-term outperformer portfolio. We've finally found one to buy. It was we bought it right at its right here. You can see this pink line here. This is the 21-month moving average. It's held support, even though there are times it had kind of busted below it, but it ended like in this month here in 2015, it came all the way right back up, closed at it. The only one that didn't was the coronavirus crash. Everything just plunged, but very quickly came right back up. You can see here it came right up to that line again, and then it's gotten support all the way up since then. And you can see going back into 2011, yes, it's always sort of got support around there. Actually, even farther back, 2010, you can see it was down there. But this here, the moving averages were just starting to turn up, and they've been in a nice uptrend ever since. But we're just starting to get a little leakage over here. And one thing we're not really thrilled about is the RS is only 35 out of 99. That's the relative strength. So it's not, and so let's go to a daily. You can see here we bought it. Let's see, what was our price? I'm looking at my other screen here. Let's see, where do we buy it? 227.50. So yeah, we were right up here. Looks like this 21-day moving average, which is still declining, it's along the 50. Really gave it some resistance right there, and we kind of been heading back down. So we came pretty close on Friday and again stopped out. Our stop is at 218.40, just a little bit below this low. It shouldn't, in a good market, this would never be coming back down here. It just we would be going. So, anyways, wouldn't be surprised to lose this. We don't have a big position, but that's the market. You can even see here. Look, this in this chart here, nice little cup here it formed. A little bit of a handle here, broke out. A lot of volatility. This wasn't even earnings was here, and then earnings was over here. So. Who knows what was going on, but you can see here, it just tried to break out, came in, then really just shot up, closed at its low. That's a sell signal right there. And then we had, 1, 2, 3, 4, 5, 6 days down in a row, now closing below the 50. We closed below the 21-day. Again, that's the green line. The 50 is the red. Just not acting in high volume, too, especially on this one day, right there. Just giving you a bunch of sell signals here. We're not even above the 50. The 50's turned down. So buying here should hold, but it shouldn't have come back down here in a strong stock or healthy market. The only thing now we have is we have low volume on this decline, but we're just not even 1% away from being stopped out. So that's that one. Unfortunately, this is the market we're being given, and it's been fortunately going on for a long time. Okay, so let's now go back to our regular watch list, and we have Lamb Weston. This stock, if you've been with us for a while, it's been on and off our list for a while, and you can see why. It's just acting really, really well for a company that produces and distributes frozen potatoes, which. There's a lesson right there I've mentioned a few times that, a lot of people think, oh, no, I can't. Why would I buy a stock like that? It's just not going to do anything. Well, it's gone from 49 to over 100. So it's made a 100% move in less than a year. And look at the earnings and sales. Look at the earnings here. We're in triple digits now, 317%, 172%. Very strong sales too, and the margins are increasing too. So even though they're dealing with frozen potatoes, there's some good numbers going on here, and it's reflected in the stocks. I mean, look at the nice move it's made. So, anyways, it's been kind of floating in and out. It did break out of this little very nice volatility contraction pattern. You can see here we had broken out on earnings. It gapped up, then it kind of was really tight. You can see here, after it broke out, we only went down about 5%. And you can see that there was no real big sellers or willing to sell this stock, even though it was up here on new highs. Let's see. Yeah, we're actually looking at all-time highs here. That's the monthly chart. And so that's a really good sign. And it only really came down about 5%, tightened up, then it broke out. And it's where we bought it coming out of here. Actually, I bought it myself in my own portfolio. I think we had enough in our portfolio here. We didn't buy it because we already had enough exposure. Unfortunately, all those disappeared. But this one looks really pretty good. But now we're getting a little bit of a sell-off back down below the buy range, or just at the buy range, which is 100.15 to 102.25. So we're just slightly below. But it looks really good, but the market's pulling in now. You can see here's the S&P and this black line starting to come in, but this is still holding up. But one thing we do like, you can see here, look at the S&P here, really coming down. This just came down a little bit, but really held. And then as the S&P was just kind of starting to try to bottom out here back in October, this was already out making new highs. And you can even see here, it's actually off the sides of the chart, but this was throughout the whole bear market. Remember, the bear market started in all last year, and as the S&P was just kind of grinding its way down, this was grinding its way higher. So really, really good-looking stock. It looks pretty good. So this is, not quite buyable. We don't like the fact that it came up and then it came down, but it's really holding in tight. So that's something that you could you could pick up a position if it pops back up into the buy range. Okay, next one is, let's go to our growth watch list. We don't have a lot of stocks left, unfortunately, this week. So the first one is Agilysys. AGYS is the ticker. So again, this one has a good RS, a 98. You can see it's just been moving throughout the bear market too. And this is a software stock. They do hardware and software applications. And this one, you can see, just despite most tech stocks just taking a huge dive throughout last year, this one just been making its way higher. Must have been some really good news here. You can see 3 very high volume days. And then since then, it hasn't really given up much. We had some on earnings, had a big plunge, but it shook out a lot of the weak holders, ended up closing back up near its highs of the day. Now it's starting to pull back here a little bit. And our buy range was actually getting above this high over here. But we're starting to come off a little bit too much. We just got support of the 50-day on low volume. So we'll see what this does. It's still looking really pretty good. The average daily volume is 167,000. It's on the lower end of it's getting close to being thin, but not too bad. That's something that's still workable. The industry group is 24 out of 197, very good. Just very strong numbers overall. You can see in the composite rating from IBD, 99 out of 99. Earnings per share is 97. We have A's on the group strength, sales margins, and blinking on the R. I was thinking ratios, not ratios. I'm sorry, I can't think what the R is. But anyways, overall, very good numbers. Growth rate 150%. It's a pretty small. It's just a small cap. It's 2 billion market cap. Not a lot of float. So this is the kind of company that you can see it's already making a really nice move since May, over 100%. So it's a stock to keep your eye on. Something good going on there. So we're going to see. We might even, if this kind of leaks off or just comes up, we might change our buy position, our buy point. But as of now, we're still over here trying to clear out above this high of 86. You can see here, whenever it got up to around there, it looked really good. You can see it kind of came up here, then was tightening up, and then it looked like it tried to break out here. That breakout didn't work, and we're coming back down. But that's one to watch. And again, it's a name that most people have never heard of, which is actually a good thing. So you don't have tons of sometimes they call it becoming just an overly watched stock like Tesla. There's just too many names in it. And sometimes they start acting a little more erratic. Okay, next one is Globe Life. They offer life and supplemental health insurance. Ticker's GL. This is another name that probably most people haven't heard of. But you can see here, just we've actually seen the insurance industry group move up to 18. We're in the top 20 now. And you can see just the annual earnings. We've gone from $4 and change to 6, then 8, and now we're at 10 and then 11. So the earnings are just really solidly growing, which is a good sign. Earnings have been increasing too. We have 11, 12, 21, 32. Sales have been kind of just flat, but no problem with that. And the margins are increasing a little bit too. So you can see why the stock has just really just been kind of just going higher and higher. Let's take a look at the monthly. Yeah, nice chart. It's in all-time highs. So that's a good sign. RS is 90, not too bad. You can see it's getting a little choppy though, but within a pretty tight range. You can see here. Actually, I would say it's not really so choppy. Now I'm looking at it a little closer. This is just 123 to 120. That's a very, very small move. So, but you can see it kind of came up here, starting to tighten up, and we'd like to see it just really get up to about 120. Well, we're at 122. Yeah. So we're really just about set to go. We'd like to see it just kind of clear out of this, get above 123.50, which is where our buy range is, up to about 126, which would take us up to, sort of the middle of this pivot range here. So that's what we're looking for. We passed earnings, a good sign. That gave us a little volatility there. But we had one sort of negative day, and then the buyers came right back in. Excuse me. So that one's looking pretty good. The next one is Haleon PLC, ticker is HLN. And this is a UK-based company that develops various consumer healthcare products. It's a recent IPO. If you were to look at all the IPOs that have come out in the last year, you're going to see that most of them would look like this. They'd be up here, and then they just plunged. And whatever this price is, say it's even 10, we're down at 1. If this was 50, we're down at 5. I mean, we're talking 90% plus downside. So this one's opposite. We've really had it made a nice cup and just kind of a little extended handle that's kind of wedging up. Not a fantastic pattern, but we were trying to see getting it above this 818. You can actually see, look at this. Here's our volatility contraction pattern. We came down here, then we had this another, let's see if I can draw the lines in here. MarketSmith is not that great about drawing lines. Okay, if you make a mistake, you got to start over. So there's our first one. Then we had our second one here. You can see it's getting, this is tighter. And then we had a third one here, even tighter. And then it looked like we had just like a one-day one here, or even we can call it this. And you can see it's just getting tighter and tighter as it's been kind of just hitting that level of 812, 815 or so. This one went up to 818. Yeah. So we're trying to buy it above 818. It did try to break out, and then I think just the general market here, the S&P again, just kind of pulled it back. We've had 4 down days in a row, but very tiny volume. So that's actually a good sign. Now this one, we're not making any money. You can see we have some negative earnings, negative sales. But for a new IPO, this is worth doing a little more research into. I don't know exactly what they do. I haven't really looked into it. Ours is pretty good for an IPO. It's so yeah, it's just ended up unsupported. It's 50-day. So we're going to watch this, like to see it just kind of come back up, say, and tighten up around that same area and then blast off. Now, sometimes we've been seeing this too. You see this kind of breakout, doesn't work, and then it goes flying back up like a slingshot. It just goes ripping right out of there. And that's what happens. We see that a lot. Earnings are coming up on the 2nd of March, which is probably what will happen. This will just kind of do nothing, and then it'll take off, or it'll plunge. We don't know. But that's unfortunately a pattern that's been really common this year and recently. Okay, let's go to the next one, which is the last one, and this is Principal Financial Group. Again, another insurance company. This one's in the diversified area. This one's not as strong. Industry Group's 49. You can see it right there. And let's see. So we had a nice little cup pattern. Well, actually, let's go to the monthly first real quickly. So again, this is that's the 2009 crash. Really plunged from over 80 down to what was the low here? 540, 541, and then just look at that volatility though. There's the coronavirus crash, another crash. This came right back. So we're up in all-time high area. That's a good sign. So we're trying to get this at 93.74. So we are trying to clear out over this little area here. Now we've actually broken down a bit. Unfortunately, we came down. We've been kind of floating around the 50-day, just flattened out. So we're a little bit a ways now from that buy zone. So we're watching this. Earnings are in 4 days. It can go either way. We just don't know. There'll be some probably big move on earnings. But it is starting to break down. Not enough that we took it off. If it breaks below this, which low here is 87.04, that will kind of sort of invalidate the pattern, and we'll take it off the list. But this is the weakest of the watch list. Ours is 87. We're always trying to get them in the 90s, ideally the upper 90s. But that's not one that we're just not getting a lot of those breakouts. Well, that's really it. This is kind of one of the shorter videos we've done. There's just not a lot of merchandise that's really looking pretty good. So, yeah, we'll be back next week with another video. Hopefully things will have improved, and we'll be seeing more stocks coming up. But yeah, just keep your eye on these, see what they do. You can put yourself some watch, in your own program. You can put in some alerts. Say if this one breaks down, you know it's gone, or if it goes back up to the buy zones. So we also have a little note there saying that's the best thing to do is just use our system here, but put your own alerts in your system so you know when things break out. Okay, well, thanks a lot, and we'll be back next week. Okay.